There's a lot of sales growth for Applied Digital, which we talked about several times in the past. Really started off as a Bitcoin mining company. It's one of these businesses that is now utilizing that core infrastructure to build out high performance computing and artificial intelligence capacity and leasing services alongside partners, which include NVIDIA and CoreWeave. If you look at the GPU computing segments of their business, they've been growing substantially. They did report adjusted earnings, which actually came in on a break-even basis. They're expected to lose 10 cents because they're spending a tremendous amount of capital dollars to build out their capital intensity. If you look at the sales numbers, they came in quite a bit ahead of the estimates at 126 million for the quarter, and that was higher by 250% year over year. And if you look at that number just for the quarter relative to even the last four quarters, basically in the trailing four quarters, excluding the one that reported, they generated around $260 million. So they're basically running now at about half of a full year's revenue from the previous year, which really suggests this stock continues to move higher based on prospects and, of course, deals in megawatt capacity, high performance computing infrastructure, and essentially partnerships. The company also gave some guidance, which is actually pretty high. They expect, at least on a 5-year basis, to return on a net operating income basis $1 billion to shareholders. And that's important because if you look at the loss last year, it was a loss of $100 million. So they're expecting a 10x increase in essentially what they lost last year into profits in the next 5 years. So they've got a lot of growth potential here, a lot of runway, and the stock is moving higher as a result of that. You have to keep in mind that capital intensity and capital needs is expensive. So as the price has been moving higher, returns over the last year over 200%, they have been issuing shares, and this is what they should do. They're basically capitalizing on this movement, issuing shares, raising money, and spending. And again, it really comes down to the trajectory of that spend, and then of course the returns on that spending. And I sort of elaborated what the guidance the company provided in the next 5 years in terms of net operating income, which again is quite a bit higher. If you consider market cap too, this is as of the close yesterday at $8 billion. They're expecting the next 5 years $1 billion in profit. So again, that might suggest that the stock is still trading at a discount considering these trajectories, but there can be some challenges you have to keep in mind. All this is based upon the continual build out of AI data centers and the demands associated with that.